Final week of August. This is your weekly market outlook for the 28th of August to the 1st of September 2023. There's a lot to talk about this week, but let's take a look at the previous week. We have a little bit more of the surprising flash services PMI across the world. So we've got a drop in German services PMI, that's a drop below 50, and then we have the Eurozone also a drop below 50, the UK also a drop below 50. The US still holding on strong at 51, which is still a drop from 52.1. Manufacturing otherwise remains pretty much below 50 at this point in time. No big surprises there. Unemployment claims in the UK and in the US, the weekly unemployment claims improved a little bit. 239,000 was expected. We've got 230,000, which is a drop from 240,000. So again, it is below consensus. And I think what's key last week didn't really happen pretty much not until Friday. We have a little bit more of a hawkish comment coming out from the FOMC during the Jackson Hole Symposium, and then on Saturday a little bit more of an extra information in terms of the ECB, what they're going to be doing. They're going to be doing things data dependent. That's pretty obvious, no surprises there. I think what's really surprising the market is actually comments from Bank of Japan's Ueda. So we've got comments coming in from Ueda basically saying that the inflation is still not quite up there yet in terms of core inflation yet. So there's no need to rush for any tweak on their monetary policy. So I think what we're going to be looking at this week could be a potential where there's a lot more carry trades going on. So there's a lot more dollar buying against the Japanese yen, the sterling against the Japanese yen, the euro against the Japanese yen, but mainly the dollar against the Japanese yen. So I think we might actually see the dollar Japanese yen strengthen a little bit, just on the back of the different comments coming out from FOMC, as well as that little bit more of a dovish tone again coming out from Bank of Japan. All right, this week, jam-packed. Everything just seems to be squished to the beginning of the week. So we've got JOLTS job opening numbers coming out on Tuesday. If we take a look at the JOLTS job opening numbers, we are looking at a little bit of an increase from 9.58 million to 9.7 million. So I think that's nice, looking at that increase there. And then we have the Australian CPI numbers on Wednesday, expecting a slight drop from 5.4% to 5.2%. We've got the German preliminary CPI monthly growth rate to remain the same. We've got the Spanish CPI as well, expecting it to drop from 2.3%, going up to from 2.3% to 2.5%. We've got the ADP numbers, which is obviously not a good indication for what's coming up for the NFP. But again, this one here expecting a huge drop, 324,000 to 201,000. We've got the US preliminary GDP all in one day, which is on Wednesday. On Thursday, we've got the Chinese manufacturing PMI numbers. This is going to be crucial for gold, for Aussies. Really important to look at these numbers. If there's actually any surprise to the upside above 50, that would actually trigger a potential run in the Aussie. That would be something you need to want to watch out for if you're trading the Aussie. Other than that, we have the weekly unemployment claims again, the last one before the NFP numbers this week, and then obviously on Friday we have the NFP numbers. But take a look at what's going on Friday. We've got the Switzerland CPI numbers, we've got the Canadian GDP numbers at the same time as the NFP numbers. Now, if we take a look at the NFP numbers, we're expecting a little bit of that drop again, 187 to 169,000 for the NFP. The unemployment rate to remain stable at 3.5%. Give or take what's been going on the previous month in terms of the weekly claims. I think a stable rate at 3.5% is to be expected, or it could actually drop down to 3.4%. But again, let's just take it at 3.5% at this point in time. Also on Friday, we got the ISM manufacturing PMI numbers. ISM manufacturing PMI numbers below 50, no big deal. But the expectation is that for an increase from 46.4 to 46.9. All right, let's just dive into the dollar index here. Now, if we take a look at the dollar index, we have seen this one surpass 103.50, maintain that position above 103.50. Sure, surpass 104. Right now, 104.50 is currently capping it. I think, in terms of where this is likely going to go, we were expecting a little bit of a correction to happen last week. Didn't quite happen. Dollar index just continued to push higher beyond 103.50, beyond 104. Right now we're anticipating 104.50 as at resistance, but at this point in time we're not really anticipating any pullbacks or whatsoever on the dollar index. Even if there's that pullback, I think we are going to be looking at 103.50, going to be supporting it strong enough at 103.50. Take a look at the Aussie USD here. Aussie USD, I think this one here is likely going to be a little bit flat. We got that pullback to 64 cents. We achieved that. Currently, price is maintaining that position above 64 cents, but at the same time, it's not exceeding 65 cents. So right now, for the Aussie USD, the way we look at it, it's likely going to be in a range bound market condition between 64 cents as a strong support. In terms of resistance, it's going to be 65 first, and then beyond that, obviously, it's going to be 66. But 64 cents right now as a strong support. However, if the NFP number comes in really strong from the US on Friday, that could change things around. We could potentially break below 64 cents, and the next support for this one here, we're not going to be looking at the support one at 63.50. We're likely going to be looking at that support to around 63 cents on the Aussie USD. But regardless, until that happens, we're expecting a little bit more of a range bound market condition for the Aussie USD. The Euro USD, this one here has broken below that key range 1.0850, 1.09. It failed to move above 1.09. It has transitioned below 1.0850. Right now, it's currently trading about 1.08, but I think this one here has that extra room to go a little bit lower. We're looking at that push lower towards 1.0750 initially, and then towards 1.07, and potentially even overshoot below 1.07 towards support to right at 1.0675. All right, so that's pretty much on the Euro USD. Any pullback to the upside, I think sellers are likely going to come in and try to push this one lower again. The loss of 1.08, it's really crucial for any further push lower on the Euro USD. Until that happens, we're anticipating a tight range on the Euro USD, 1.08, 1.0850. That should be the estimated range for the Euro USD. The Pound USD finally lost that 1.27, but the way we look at this right now is that sure, it has lost 1.27, but right now this is currently well supported about 1.26 and 1.2550. So we do have a little bit of a floor at 1.2550 for the Pound USD. As long as it stays above 1.2550, we are looking for a potential retest of 1.27 as a resistance. Failure to move back above 1.27, that's when sellers are likely going to come in for the Pound USD and pressure this lower. So I think there are still traders out there holding on to long position on the Pound USD, waiting for that retest of 1.27 at this point in time to determine whether or not they should actually cut off their position. If that happens, then they will get rid of their buy position, and then in turn it will be a sell at 1.27. A lot of traders are going to be watching at that level as well for the Pound USD. Now finally, we have the Dow Japanese yen, and what's coming up from the Jackson Hole Symposium. This one here is pretty much still on track. We've got 145. That was the expected support level for the dollar Japanese yen. We managed to dip slightly below 145, then immediately close back up above 145, kind of negating the previous day's run on the dollar Japanese yen. Right now, this is currently trading above 146. This is still on track for that push higher towards 147, potentially towards 148 as well. Ultimately, though, if we take a look at the Fibonacci extension, there are two key levels to watch out for: 127.2% at 147.20, as well as 161.8, pretty much located at 149.91, very close to 150. So I think the ultimate target for the Dow Japanese and carry traders are still going to be that 150 level. That 150 level is obviously the level where a lot more traders are going to be worried about potential intervention from the Ministry of Finance in Japan as well as the Bank of Japan. So yeah, until that happens, we actually have a lot of room to go for the dollar Japanese yen. Momentum wise, it's still trading above 80, so if this one continues to push up higher, no big surprises there for the dollar Japanese yen. All right, okay, so pretty huge week. There's a lot of stuff going on this week, so again, good luck for your trades. I'll see you soon.